Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Barb Armstrong. There's the bell, which means that the cash market is off to the races, but the futures market has already been working this morning. So we'll take a look at what's going on. Thanks to all of you for joining us here this morning, whether you're here for the first time or whether you're here on a regular basis. We're glad to have you. And whether you're here in the recorded version or the live version, we're glad both ways. Be a part of the conversation, though, and that's why Barb is here. Barb's a 20-plus year veteran of the financial market. She is a great coach. Many of you had the chance to meet with her this last week when we were in Chicago at our Market Drive event. We are going to be in Orlando. I don't think Barb's going to be at this one. She might be. I'll let her put that in the chat. But we're going to be in Orlando this coming weekend doing a technical analysis and option strategies workshop. So we look forward to seeing some of you there. I'm also going to be in branches in Sarasota and Little Rock surrounding that event. So maybe I'll see some of you there at those events as well. So we love to meet you in person. We love to see you here in the chat. Be a part of the conversation. Click on subscribe. Be a part of the Trader Talks webcast channel. Follow us on X. Lots of great ways to keep in touch with us. Now, let's get started today because there's some stuff going on in the market, namely in the precious metal space. We'll see what that's doing, as well as in the cryptocurrency space. So really quickly, as we get into this discussion, remember that everything we talk about simply for illustrative and educational purposes only is not a recommendation or any kind of advice. Remember that futures and futures options trading includes substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options. Make sure that you have an understanding of those characteristics prior to trading futures products. If you're going to trade something like a cryptocurrency future, make sure that you are aware of the additional risks associated with those particular instruments. As a matter of fact, let me just pop to this next slide here. Because they have unique and significant risks, make sure that you read the NFA Investor Advisory and the CFTC Customer Advisory on those two products if you're going to consider any type of trading strategy involving those virtual currency strategies. We're going to be using the thinkorswim desktop software platform today, specifically the paper money version. It's a great educational tool. It's a great learning environment. It's not a guarantee of future success out there in the real world. And it doesn't do certain things that a live trading account will do. Oftentimes we'll get filled at the midpoint between the bid and the ask in the paper money account, whereas fills may be different when it comes to a live trading account. Speaking of orders getting filled differently, when we talk about stops and futures, one of the things that we want to pay attention to is the fact that stop orders do not guarantee an execution. Stop orders that generate a market order due to exchange rules will be either rejected or be substituted for an exchange designated limit order on that instead of that originally triggered market order. And that works within a set of ranges or set of points, oftentimes referred to as protection points or a protection range. So there is the possibility when setting up a stop order that generates a market order that order may not get filled or may fill at a different price than you were expecting. And same thing with a stop limit order. There's the potential that the price of the instrument could gap around or could move around or through that limit range very quickly, especially in a fast-moving market. So things to pay attention to as we get into this discussion. So let's pop over here really quickly and take a look at what's going on. The first position that I have up here, I'm going to come back and take a look at one that is also on, but I had set this one up and I was hoping that maybe this would kind of hang out and wait for a little bit before it filled. Not because I didn't want to get filled on this particular example trade, but I wanted you to see what I was looking at here for that fill here on this particular trade. This happens to be /MET, the micro ether or Ethereum futures. The bid contract is /ETH. That's Ethereum, which is one of maybe kind of the second pillar of the kind of traditional, if that really makes sense. I don't know if traditional when it comes to cryptocurrency makes sense, but alongside Bitcoin, Ethereum is kind of the second pillar of the cryptocurrency pantheon. But what I had set up is this breakout. Now, I'm going to go back to the longer term chart. This particular grid that I have is my futures movers grid. If you're new with us on this particular webcast, I have linked this grid in the description of this page. I'll show you what it looks like when we look at it side by side. Left-hand side is the longer term chart, right-hand side, the shorter term chart. So left-hand side is a 1-year daily chart, right-hand side is today's trading and 5 minutes. Each one of those candles representing 5 minutes worth of trading. I'll be really nice here because I like you guys. You guys are awesome. I'm going to share this grid with you here really quickly because this is one that we use on a fairly regular basis. So I'm going to fire this off. I'm going to put it out in the chat. And remember that anything we share in the chat, any of these grids or studies or anything else, these are for illustrative and educational purposes only. They are not guaranteed as to time or accuracy. Use them at your own risk. They are there for your use, but we don't guarantee them for any kind of suitability. So there it is out there in the grid. I'll also put it in the description page. So what I was looking at was kind of this, and we looked at this a couple of weeks ago, this building symmetrical triangle on Ethereum, and it had kind of built this wide base. So what I did in putting this trade together this morning is I looked at the base of this triangle, and I actually kind of attenuated that a little bit. I came in a little bit from where the actual base of the triangle was into this kind of symmetrical triangle. And I took that line that I drew across the base from here down to here, and I doubled it, and I just duplicated it, not doubled it. I duplicated it, and I put it right here off of that baseline, kind of the midpoint of this symmetrical triangle. And that gave me this target up here right around 5601, kind of that breakout, and a slightly attenuated target at that, not really the full technical target. Now, Kevin Horner, one of our great coaches, teaches a webcast, and I think it's on Tuesdays, on trading price patterns. And he talks about symmetrical triangle breakouts. He talks about, ascending triangles, descending triangles, bull flags, all of those types of flag type patterns or technical price patterns, of which this is one. So what I was looking for this morning as I came into this, I'll shift over to this right-hand side grid, and I'll just maximize this. This is my today's trading 5-minute time frame. So each one of these candles represents 5 minutes. And down in the bottom, I've got a MACD indicator, a technical indicator. This MACD histogram is simply a momentum gauge. And because it's a momentum gauge, it gives me an idea of how much oomph is behind the move. Ariana, one of the things you might want to do is grab that little gear icon there in the bottom of your webcast page and push that to auto or push it to its greatest resolution. That may change or help that blurriness. But what I saw this morning when I came into this and I was starting to plan trades for this morning was the fact that this candle right here early this morning. Oh, thanks, Beach. I appreciate that. She's now teaching Rachel. Oh, wow. Rachel Tischel is now teaching that price pattern. She is a phenomenal, not that Kevin's not great, but Rachel is a phenomenal technician. As a matter of fact, she's a CMT. You see her on the Schwab Network. Great addition to the coaching team. So we're glad to have Rachel. I'm glad she's teaching that. Thanks, Beach. All right. So what I was looking at was this kind of top, this high tick right here of this candle. And so we got that big push, and I was looking for this to maybe be a bull flag, right? So a rally up and then a little bit of a pullback and then a move higher. And that's in fact exactly what it did. If I'll grab my magic marker here really quickly, we'll just kind of line this out and see what that was doing. So what I was looking at was this bounce and I was looking for a little bit of a pullback and then a move higher. So I drew this line right here, right off the top of that, looking for a move above that level. Now, as so many times happens, this is a circumstance where, we try to get into a trade, we set up the trade, and it goes in the direction that we think it's going to go, and then it kind of comes back down. And that's exactly what happened here in this particular case, as far as this movement. Ariana, it's the resolution of your screen and your YouTube feed that's causing it to be blurry. So a couple of things you can do to resolve that: stop the playback and then start it again, or exit and then come back in and see if you get a better bandwidth connection. All right, so what I was looking at was a break above this level right here. And I put that level at about 47.95 as kind of that breakout. So I was looking for a move above that. And in fact, I got that on this candle right here, the 6:25 a.m. candle. That's Pacific time, I'm guessing. Yep, that's Pacific time. So on that 6:25 a.m. candle, I got the break above that resistance level, that high mark of that little bull flag, because this kind of went up and then went sideways. And then guess what it did on the next 5-minute candle? It came right back down, and it came right back down from there. And now you can see where it's sitting. It's now kind of sitting back on a little bit of a level of support. And look at what momentum is doing. I'm just going to ask this question. How many times do you get into a trade where you think it's going to go in a particular direction, and then you get in and it goes exactly in the opposite direction? It happens, and that's why we protect or manage our risk. So the way that I set this trade up, I'm going to pop back over to the other grid for a second. Yeah, Beach, me too. So here's how I set this trade up. I actually looked, here was my entry right here. Originally, my entry on this trade was kind of the breakout of that diagonal, and that happened overnight. I wasn't watching it. So I got in on that high tick move. It's not a bearish candle yet on a daily candle. My target is out here. We talked about where that target is. And I moved my stop. When I placed my stop, let me just kind of put this stop right here. I put this stop right back at this point right here, kind of the midpoint of that candle. And that's where I lined out the stop. So if we go over here to the monitor tab and we take a look at the working orders here on this particular trade, my stop to get out of the trade, if it goes down, is at 43.01. 43.01 is where my stop is if this is going against us. If it's going in favor of us, right? If it's moving higher, I've got a take profit order up here at 5,600. Now, what's interesting is I did this. I bought 2 contracts when I entered the trade. I set the order up to buy 2 contracts. My take profit order was only selling 1 contract, meaning if this got up to that target, I wanted to let another contract continue to run to the upside and let this continue to work if it was going to do that. And then I would adjust the stop accordingly. If this goes down, I wanted to take out both of those stops. So I'll show you how I built this order here in just a second. But that idea being that this take profit order and the stop order in this case are asymmetrical. I'm letting one run, but I'm taking both off if it goes down. So we'll go back over here to the chart, and we'll go to the shorter term chart, and you can see what's happening here. So let me kind of squish this back in. I'm going to squish my MACD down because we don't need to see that at this point. And if I kind of squish this back in, you're going to see where my stop is. My stop is way down here. That's my stop to get out of both of those trades. So I'm giving it a fair amount of risk here, but I'm also giving it a fair amount of target. So one of the questions that somebody asked last week was, how do you use short-term signals as a means to enter longer-term or intermediate-term swing trades? And that's kind of what this it kind of created as we put this trade together, was a longer-term swing trade, the breakout of that longer-term target, that symmetrical triangle. So I'm willing to give this a little bit of movement to the downside, given the fact that it is still continuing to hold that overall trend. It's got that squeeze. In the short term, I think this may be a little bit of profit taking on this quick move in Ethereum. Now, this is the micro Ethereum contract. So let's kind of go through the numbers here. So tick size is 0.05, which means that this is the value right here. This is the significant digit, the one right after the decimal, and that's going to move in 0.5 increments. It's going to move from 0 to 5 to 0 to 5 to 0 to 5. That's going to be the increment that it moves in. And when it ticks, that's going to be 5 cents. When that moves, that's going to be a nickel. The point value, meaning when this goes from 4714 to 4713 or 4715, that's 10 cents. So this is a small contract. There's some benefit, I think, sometimes to trading small contracts in terms of managing capital efficiency, in managing exposure, in managing practice, becoming familiar with how a product trades. So the idea of trading small is supported by these micro futures. Now, that doesn't mean that you can't scale up. But it's important to remember that when you're managing losses and when you're managing trades and when you're becoming accustomed to trading a particular product or a particular strategy, trading small to begin with is perhaps a prudent way to go about doing that. I'm not going to say it's a recommended way to do it. I'm not going to say it's the best. I don't say anything is the best. Well, my wife is the best. I'm just going to say that. She's better than all other wives. That's not all other wives. Okay, I'm going to stop talking now about that. But that being said, trading small is an important consideration. Trading small is an important consideration, especially as you are learning a strategy. So that information in purple, that study right there is actually a study that I scripted. It's called Futures Labels. And so in that grid that I shared, yes, exactly, David. I'm telling her right now, put down the shovel and back away. No, I shared this grid. That study is included in the grid so that you can use that for your own purposes. You can put it on there, and it shows notional value. So notional value is the amount of value entailed in this contract, right? So this is the price of the contract times the point value gives us the notional value. So the notional value in this contract is $471.55. So you see as that changes, that notional value changes. But one of the other things that we need to consider is that trading a futures contract requires a margin account, and it requires margin to be present in order to take the trade or in order to initiate the trade. The margin to start the trade is different from the margin to keep the trade going. So if we click right here on this little drop down and we go to the futures sub tab and we come down here to micro ether futures, we see that the initial margin required to initiate a trade on this particular contract is $165, right? And in this particular case, that initial margin is going to be larger than the maintenance margin, but maintenance margin changes, so does initial margin, can change and can change based on market conditions. So it's important to pay attention to that, and it's going to change as your position changes. If we were to take a look at the bid contract for this particular instrument, if we were to take a look at /ETH, the Ethereum futures, here's the difference. $83,853 of initial margin. Not very capital efficient. I mean, that's a big swing, and that's a big tie-up in terms of that initial margin. So you see the difference between /ETH. And again, remember, this is a cryptocurrency, so there are specific risks associated with that. But MET is our micro ether $165 of initial margin is a little bit more palatable, I think, than is $85,000 for a lot of accounts. There might be some that can support swinging those bigger contracts. But that's an important consideration. Also an important consideration is the fact that we've got a survey link out there in the chat. That survey link is how we listen to you and help to make these webcasts better. So that's one of the questions somebody asked, not only in the chat, but also in the feedback survey, was, can you help me to understand swing trading or intermediate term trading and not just short term intraday trading? And so that's why I've tried to incorporate that in the mix. So fill out that feedback survey. Barbara's going to repost that link a couple of times and let us know what you think. Of course, we strive to give you the best experience possible, so the numbers speak for themselves. But the important part of that is that comment section and letting us know what you think about these webcasts and what you want to see. I appreciate that very much. So now, as we jump into this next part of the discussion, I want to pop back over to this grid, and you can start to see that little bit of a bounce. So we didn't get out and we didn't exit this position. We've given this a little bit of room to move down here to the downside. But you know, we're looking for this to continue to move to the upside. And again, this is the way that sometimes trades go, and that is the perspective of this. So we're starting to see that little bit of a bounce here, and maybe kind of coming back over here and looking where that support level is. Perhaps that 47.22 is a level of support. Now let's go to the monitor tab and see what that trade is doing. It's in our futures group here, and you can see where is it? Where did I put it? Oh, I probably put it. Oh, you know what I did? I put it down here in unallocated. So I'm going to move it to our futures group just so it's there. Here's our /MET. And you can see, so I did 2 contracts, right? And here is the maintenance margin required over on the right-hand side. That's a column. And normally when we look at equities, like when we're looking at stocks, we're looking at this column as buying power or buying power impact. But one of the things that we can do now with the platform is you can come up here to this gear icon up at the top. You can go to application settings, and you can come down here to positions, and you can swap that between position margin or buying power effect. So if you're trading a lot of futures contracts, it may be more efficient. It's going to be the same number, but it's going to just show up differently, and it's going to tell you differently. But you can label that margin requirement so that you can see that in your monitor tab layout in your positions. And it just shows you that margin requirement instead of buying power effect, because a lot of people will say, well, what's this buying power effect over here in this column? So I changed that to margin requirement for this particular account because this is my futures trading paper money account. All right, so that one's not working for us in this particular case, but there is one that I put on this morning that is working in our favor, and that is the micro gold contract. So let's go back to the chart, and let's go to, let me put this back to its double sell view, /MGC. Remember I said off the top of the chat that precious metals were working this morning. And kind of looking at that longer term chart, looking at the CCI, the commodity channel index, which is another momentum gauge, it's up above that kind of 100 level, which is kind of that strong trend indicator. CCI is another Wells Wilder creation. If you're a technical analyst or a technical analysis fan, Wells Wilder is kind of the godfather of a lot of technical indicators, including ATR, CCI, parabolic stop and reverse, RSI, ADX, ADR. Lots of different technical indicators were created by Wells Wilder, and CCI one of those. So I'm kind of a big Wells Wilder fan, which makes me a total technical analysis geek, for those of you who know. All right, so taking a look at this trend, which is strong at the moment, according to the CCI. And coming over here to the right-hand side, the way that I set this trade up, I'll make this side bigger. And what I looked at was the fact that this had been bouncing over the course of the last little while. This had been bouncing under this resistance right around the 39.98 level. And so it went boom into that resistance, boom into the resistance, and now kind of built this kind of reverse cup and handle pattern for those of you who, again, are price pattern aficionados. This reverse cup and handle came down to a bottom, rallied back up, and broke out. And now it's come back down and kind of retest this area, starts to rally again a little bit. So what I simply did is I took this distance, the bottom of that pattern, and I duplicated it up here. So I set my target up here around 40.30. I set my stop at that next most recent kind of support level down here at around 39.86. 39.86 being the stop area, because if it goes down below there, it's probably coming back down and making another double bottom type of test. So it blew out, it kicked me into the trade. It's pulled back a little bit. It started to rally back up. Now the line that I might be a little bit more concerned about at this particular point for this trade might be this diagonal right here. Is kind of breaking out of that range that it's flagging in a little bit. This is, again, another kind of bull flag where you get this bull flag into a little bit of an expansion. And this is a little bit more concerning. I'm just curious, as we're talking about this, and I know we've got a lot of technical analysts on this chat and on this webcast. Why would it be concerning to have a bull flag that starts to do this, where there's a disparity here, a growing disparity? Let me grab my magic marker. And this range right there, that distance, that angle is growing. It's increasing. Why would that be a concern in a bull flag type of situation? Because, you know, we look at a bull flag and there's a number of different ways that that flag can present itself, and then looking for that to break out. But this one might be a little bit concerning. Now, Koala asks a question, not koala, that would make you a bear. But Koala asks a question, why all of a sudden I'm not using RSI anymore? I do use RSI. I use CCI. I think CCI and RSI kind of similar types of indicators. They're momentum gauges. MACD is a similar type of indicator. CCI works especially well with precious metals, I think, just because of the timing and kind of that push and the way that precious metals tend to trade. Yeah, lower highs and lower lows at the same time you're getting roughly equal highs. It's an expansion pattern, Wiley, absolutely. So think about this. When you have prices, and I just want to kind of talk theory for just a second here. When you have prices that are squeezing into a consolidation pattern, that means ultimately that where buyers are buying, which is at the support level, and where sellers are selling, which is at the resistance level. So I'll just label this sellers, and I'll label this buyers, right? I'll label that sellers and that buyers. When those are coming closer together, the opinions of those two groups, buyers and sellers, is getting closer and closer together. It's getting closer and closer to a consensus. They become very, very similar in their thought process. And then when it breaks out of that consolidation, now you typically tend to get a move, and in the direction of whichever side has the most momentum. And so that's why looking at a momentum indicator is an important thing when you have a consolidation pattern. TTM is another momentum indicator that would give you an indication of that type of idea. But when you have an expansion pattern, when you have a pattern where, from a technical standpoint, let me see if I can clear these real quick. But when you have a pattern where price has gone up and then it starts to expand like this, what that means is the opinion of sellers, which are up here, sellers, and buyers, who are down here, buyers, their opinions are getting further and further apart. And because their opinions are getting further and further apart, they're able to not necessarily push price out of this range as easily, because if you've got buyers stepping in here, they might be buying here, and 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 exhausting themselves. And sellers, quite frankly, also might be doing the same thing, selling here and selling here and selling here and selling here, and exhausting themselves as well. So this expansion pattern tends to be an indication of exhaustion of one side or the other. You don't see as big a follow through typically out of an expansion pattern as you do out of a contraction or a consolidation pattern. It's just the way that the trading mechanism works. So oftentimes what you will see in an expansion pattern like this, unless you get some news that comes in or one side or the other really starts to take over, is that it just kind of dribbles out the front of that pattern. And you notice what it's doing here. We had buyers, 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 sellers, 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 buyers, 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 sellers, 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 buyers, and now dribble, dribble, dribble coming out the front. So you tend to get less reactive breakouts out of these expansion patterns. And I think that's what's going on here. And there's the thing about it is there's no way to know. Now, if we had been looking at this and we hadn't placed the trade and hadn't put this example trade on when it broke that this resistance here and looking for that breakout, if I were looking at this as just a bull flag right now and not having traded it, I would be waiting potentially from a technical analysis perspective, not a recommendation by any means, but I would be waiting from a technical analysis perspective for a breakout above this range to really give me a clear indication of price going one direction or the other. Price gaining some momentum. Because you notice what's happening with momentum here on the MACD as a momentum indicator. It's growing. You've got a little bit of a bullish divergence here going on because price is kind of going sideways, but you've got higher lows on the MACD, but it's just not really dropping one way or going to the upside. Oh, Phil, absolutely works both ways, both for equities and options and futures. Any tradable instrument where you have a back and forth between buyers and sellers, you're going to have these types of price patterns. That's just the nature of the game. You know, people talk about the fact that, the idea that AI is going to change things. Well, until AI is going to be a great tool, but until AI becomes sentient and makes its own decisions, which it doesn't, it bases the decisions off of us, it's going to reflect human nature. And this is human nature at work, right? Kelly says it's floundering. Yeah, that's exactly the state of affairs here. It's kind of floundering along. So it was rocking and rolling. I mean, look at this. We had 1, 2, 3, 4, 5, 6, 7, 8 bullish candles that were opening and closing higher. Each candle was moving higher, and you had strong momentum to the upside. We got in on that breakout, and then it just goes sideways. So that being the case, we've got our stop in here to protect ourselves if this goes against us and take the trade off. Now, that's not going to guarantee at what price we get out. It's not going to guarantee that we actually get out of the trade. So attention must be paid to this. You can't just leave this and set it and forget it. You can't do that with any trade, in my opinion. And we had this conversation a couple of weeks ago. I had this conversation with Mindy, one of our great reviewers. You can't set and forget these trades. They are not set it and forget it trades. You got to pay attention to them. But we've got our target up here if this does continue to move, if it does gain some momentum. Because the thing about trading, especially trading futures, especially trading something like gold futures, which are imbued with circumstances and characteristics beyond just the fact that this is a precious metal, because it serves as a de facto hedge against inflation. It serves as a offset to dollar movement. I mean, all of those things that go on with gold are part of this mix, part of the narrative. But it's trading here in a way that is just kind of languishing at the moment. So let's take a look at where we might also see some additional strength. What I want to do really quick is I want to pop over to the grid for the futures on the indexes. And I want to do that too, though. At the same time, I want to show you where there's some additional resources. If you want to learn a little bit more about futures markets and futures and the way that they work, come over here to really quick, schwab.com/futures is a great place to go. And here on schwab.com/futures, you're going to get some information about, the introduction to futures, futures contracts, futures margin, questions about them, futures markets. You're going to see some information about those specific markets. You're going to see some of the benefits potentially and challenges in trading futures. But there's some great commentary, futures commentary that happens here on a regular basis. Some of our great futures traders within Schwab, Michael Zaremski, who you see on the Schwab Network, which is brought to us by our media affiliate, Charles Schwab Media Productions, which is a separate but affiliated company. Michael's on there quite often talking about the futures markets, but he writes a daily commentary. And again, remember, this is information to help you make decisions, not recommendations. But that's a great way to learn a little bit more about futures trading. And if you want to come back and you want to look at some of the webcasts that I've taught, come over here to Trader Talks webcasts. Click on subscribe. That's the only thing that we ask when you come here is click on subscribe if you haven't already. And just search for futures. And you're going to find the futures, the Trading Futures playlist. You're going to find webcasts that Brent's taught, that James Boyd has taught, that Michael Fairborn has taught in that futures area. So this is a great place to learn a little bit more about that. By the way, I just want to show you this really quickly. I want to pop over here to the Schwab coaching page. So schwab.com/coaching. And I'm going to go here to in-person events. And I'm going to scroll down to the in-person event coming up in Miami, Florida. Barb's going to be there because she and I just booked our flights yesterday. But at the JW Marriott Turnberry in Aventura, which is kind of like Miami, but nicer, we're going to be doing a 2-day advanced options strategies workshop. It's going to be me and Kevin Hinks, Joe Mazzola, Barb Armstrong is going to be there. But part of that curriculum for this webcast or for this workshop is a segment. I'll show you the agenda here really quickly, is a segment on futures. We're going to spend a little bit of that time talking about futures on day 2. We're going to understand how futures works, a little bit about futures options. So some great stuff there. And our event sponsor will be a third-party sponsor, CME Group, the Futures Exchange. So you get that opportunity to kind of learn a little bit more if you want to join us for that. And this is at no cost to you. Come and join us. This would be a good time if you've got some options experience to kind of extend that options experience as well. So we'll look forward to seeing you there in Miami. By the way, I also happen to just wanted to mention really quickly, we've got a bunch of other live events coming up. Including, let me just pop right over here to our in-person events, including this weekend in Orlando, which is full, by the way. We're going to be doing a market drive in Anaheim in November, right before Thanksgiving. Great place to spend your pre-Thanksgiving weekend in Anaheim, California. Then we're going to be in Houston, and then we're going to be in Miami. And then after the first of the year, Dallas and Seattle, and then a place that we have never been before, we haven't been to for probably, I'm going to say 15 years, Sacramento, California. And then we're going to be in San Diego with another market drive, in Atlanta, and then Denver. So we're going to be all over the place. So we appreciate you being with us and joining us for that. So I wanted to pop over here really quickly. That trade's still kind of falling off a little bit. If it goes, it goes. And if it moves, it moves. And that's why we manage these trades. So what I'm going to do is I'm going to change my grid really quickly to my futures grid. Let's take a look at what's going on in the indexes this morning. As we now, initially, I think this morning there was an expectation that maybe there was going to be some progress on the government shutdown. It seems as if that's waning a little bit. So the market is just kind of dribbling along here this morning in the /ES futures market, /NQ, the NASDAQ kind of moving a little bit higher on the heels of the AMD in the equity space. That moved to the upside, starting to move the the NQ futures, and the Russell 2000 kind of languishing again with that concern about will the government shutdown continue to slow down. The other one I want to pop in here really quickly is /CL. That's the crude oil contract. Crude, following Sunday's OPEC meeting, still coalescing down there right around the $60 a barrel area there as support. So, again, a lot of things going on. /HG, copper on the move. Not a precious metal, but an industrial metal. I know a lot of you take a look at silver. /SI is the big silver contract. It's backing off a little bit, just like /GC. Gold is kind of, sort of, at the moment. Let's take a look at /BTC, the Bitcoin contract, seeing a little bit of a pullback, just like we were seeing in /MET, in that Ether contract kind of slowing down just a little bit as well. So kind of casting our eyes around the market. The one I wanted to also look at real quick before we go, /10, why? As we've got a Fed meeting on the imminent horizon, I think next week. And that Fed meeting is, again, brings the potential for another interest rate cut. And so we see the /10-year, the 10-year yield futures continuing to maybe kind of languish a little bit sideways here, not really driving one direction or the other. So once again, I just want to say this. Thank you very much for joining us. Thanks to Barb Armstrong for helping out. Follow us on X at Ben Watson CS, at Barb Armstrong CS. You can follow us there. I post a bunch of stuff. Usually I post about futures kind of in the middle of the night when I wake up and I look at my phone and see that the futures are moving. I'll post something on X, but not always. But Barb posts a bunch of stuff there too. Follow us here on our YouTube page. Click on that subscribe button down at the bottom of the page. And Barb just reposted that feedback survey. Let us know what you think. Help us to make these webcasts better for you. My thanks to Gabe and Andrew and our great production staff, to Mindy and Nikki, our great review staff, and everybody else that helps to bring these webcasts to you. And thanks to all of you for being here with us. Thanks again, Barb. We will see you guys very soon. Have a great day, everybody. We'll see you in Orlando. I'm getting on a plane tonight and heading to Tampa and Sarasota, and then I'll be in Orlando on Thursday, Friday, Saturday. Sunday, I head over to Little Rock, and I'll be there at a branch event on Monday. Take care, everybody. Have a great day. We'll see you soon. Bye-bye.